Hello everyone, I am CA Pratik and you are watching the second part of the revision lecture for the salary head of income for CA intermediate examinations. Okay, and we are going to be discussing about perquisites. But before starting the revision lecture, I would like to ask you something. I saw in my video analytics that only 30% of the people who are watching my revision videos have subscribed to the channel. If you are one of the 70% who have not subscribed, you know who you are. So I would request you to subscribe to the channel so that in the future, whenever some useful video is popping up, you will be updated and you will be able to take the benefit of the same. Okay. So now let us start with the revision. Let us quickly revise the salary chapter. Okay. So firstly, in perquisites, I told you that there are fully exempt perquisites, partly exempt perquisites and taxable perquisites. So let us see what are the fully exempt perquisites. These are the facilities which are given by employer to employee for which there is no tax in the hands of employee. Number 1. Telephone or mobile bills of the employee paid by the employer. Number 2. If employer pays any tax on the non-monetary perquisites, then such tax will not be added to the perquisite value. Okay, it is exempt. Next, section 10 clause 7. If the Indian government is giving perquisites to an Indian citizen working outside India, then such perquisites are totally exempt from tax. Similar point we also saw in the allowances. Okay. Then any conveyance given to High Court or Supreme Court judge is exempt from tax. Next, any goods sold by the employer to the employee at a reasonable price is exempt from tax. Next, any transport facility given by the employer to the employee is totally exempt. That is transport facility from office to home and home to office. Now, you should be very careful that if transport allowance is given to the employee, it is fully taxable. It is only exempt for the specially abled people, that is blind, deaf, dumb and handicapped, up to rupees 3200 per month. However, if other than allowance, if directly the facility is given, it is fully exempt. So you should be very careful to differentiate between allowances and perquisites. Okay. Next, if any training is given to employees, then also it is exempt because usually training is for official purposes. Now let us see the partly exempt perquisites. Okay. So before discussing the partly exempt perquisites, I would like to tell you something that if you see any question about perquisites, if any amount is recovered back from the employee, then you should reduce such amount from the perquisite value. I am not going to tell you again and again. So whenever you see a question where the employee is paying some amount to the employer for perquisites, then find the total perquisite value and reduce the value recovered from the employee from the perquisite to find the net value. Okay. Now, first let us start leave travel concession. So first special point about leave travel concession is that it is not available, that is the exemption for leave travel concession is not available for the employees who are opting section 115 BAC, that is new tax regime. Okay. Now let us see exemption under section 10 clause 5. Okay. Firstly, if travel for leave travel concession is by mode of air, then the exemption will be economy fare of the national carrier, that is Air India, or the actual expenses whichever is lower. If it is for any other mode other than air, then you should see whether railway service is available or not. Okay. Here you should be very careful. For example, if I am an employee, I am getting LTC and I am traveling from Coimbatore to Chennai. Okay, even though I am traveling by bus, still you should only compare it with the railway fare. Okay, so whether I travel by train or not, it does not matter. If a train exists, you should compare the train value with the transport value. So here you should be very careful. That is why I drew the danger symbol. Okay, so first class railway fare or actual expense whichever is lower will be the exemption for leave travel concession. Next, if between origin and destination if railway service is not available, then you should see whether a recognized transport system exists or not. If recognized transport system exists, for example a government bus is there between origin and destination, then you should compare the deluxe class fare of such recognized transport system with the actual expenses, and whichever is lower will be the leave travel concession exemption. Next, If recognized public transport system does not exist, then you should take the first class railway fare for the similar distance or actual expenses, whichever is lower. Now keep in mind that you should compare this railway fare, deluxe class fare, airfare, etc. with the shortest route from the origin to the destination. Don't take a longer route because that is cheating. Okay. Now, sir, is this leave travel concession available only for the employee? Answer is no. It is available for the family members also. Who are the family members? First, spouse, and then children, and parents, brothers, and sisters if they are dependent on the employee. Who are the family members? Spouse, that is husband or wife, then children, and parents, brothers, sisters if they are dependent on the employee. Okay. Now for children, there is a special point in leave travel concession, that leave travel concession exemption is available only for a maximum of 2 children born after 110/1998. Okay. So if before 110/1998, those children you should not count. For all the children you can give the exemption. You should see only the children born after 110/1998. If they are born after 110/1998, maximum 2 children will get the benefit of exemption. However, if after 110/1998 only one child was born, and after that one child being born there were twins being born, okay, that is multiple births in the same delivery, in such case you can take the benefit of LTC for those children as well. Okay, so you should be very thorough with this point. Next, leave travel concession is available only for 2 years in a 4-year block. Okay, so what is the current block? The current block is 1/1/2018 to 31/12/2021. So within this 4-year period you can claim the LTC only 2 times. However, if you are not able to claim LTC one time, or if you are not at all able to claim LTC, you can carry forward one LTC to the next block, and in the next block you can take the benefit of LTC 3 times. Okay, leave travel concession. Sir, but if I am not taking benefit of LTC at all, can I carry forward 2 LTC? Answer is no. Maximum only one LTC can be carried forward to the next block. Okay. So, leave travel concession to High Court and Supreme Court judges is exempt without any condition. And be very careful that LTC benefit is available only if the employee is traveling within India. Within India. If employee is traveling outside India, no exemption will be given. Okay. Then one more special point, this leave travel concession can be given after retirement or termination of service also. Okay. So I hope you are thorough with LTC. Now let's go to medical facility. Firstly, let us see about treatment in India. If treatment in India, okay, and treatment is given to the employee or their family members, okay, who are the, excuse me, who are the family members? Family members means same as LTC, that is employee, sorry, that is spouse, children, and parents, brothers, sisters if they are dependent. However, for medical facility, they are telling since it is for treatment purpose, we will not limit the number of children. How many number of children are there? Everyone is allowed for the exemption. Okay, wow. So now, if treatment is within India, exemption is given for the medical facility provided by the employer to the employee. Okay, if medical treatment is done in either the employer's hospital or medical treatment is done in government hospital, that is a government hospital or a hospital of the local authority or a hospital approved by the government, and then if the disease is a prescribed disease and medical certificate is available. So sometimes what may happen is for some prescribed diseases the treatment will not be available in a government hospital. So for prescribed diseases, even if it is done in a private hospital, still the exemption will be available. Okay, wow.
Now, one more point has been added, that is point number 4, and that is if the treatment is relating to COVID-19, then the amount given by employer to employee or the treatment given by employer to employee will be exempt perquisite. It will not be taxable. However, there are some conditions given by central government. Earlier they were not available, but now the conditions are also available. So what are the conditions, Kanna? The condition is that the employee should submit the following documents to the employer. What are the documents? Number 1, COVID-19 positive report. of the employee or the family member for whom the treatment has been done. Number 2. Necessary documents of medical treatment within 6 months of the COVID positive report. So the treatment must be done within 6 months of testing positive for COVID, and for that the documents must be available and to be submitted to the employer. And number 3, certification in respect of all the expenditure incurred on treatment. So the documents relating to the expenditure incurred should also be given to the employer. If all these three conditions are satisfied or all these three documents are given, only then the perquisite given by employer to the employee will not be taxed.
All other type of treatment is taxable. Okay. Now let us see what will happen if treatment is outside India. If treatment is outside India, then treatment is allowed as exemption for employee and family members as well. Okay. However, for the travel and stay, okay, for the treatment and stay and travel, exemption will be available only for one patient and one attendant. Okay. So if there is more than one attendant, for the second or third attendant, the exemption will not be available. Okay. Now for the purpose of treatment and stay, if the total expense is more than the RBI limit, then amount up to the RBI limit only will be allowed as exemption. Okay. So for treatment and stay, you should see the RBI limit. If the amount is within the RBI limit, entire amount allowed as exemption. If it is more than the RBI limit, only the RBI limit, okay, will be allowed as exemption. Now let's come to travel. Travel expenses given by the employer, it is also exempt perquisite. However, it is exempt only if the gross total income of the employee should be up to 2 lakh rupees without including this particular perquisite. Okay. So travel expense is also exempt, but only for small employees whose gross total income is up to rupees 2 lakhs. Now, exempt insurance. Even insurance paid by employer to employee, it is also exempt in certain cases. Number 1, health insurance given by the employer. If this health insurance is as per section 36, then it will be exempt for the employee as well. Okay, section 36 you should link with the PGBP chapter. Now, if any reimbursement of health insurance is done by the employer, even that is exempt perquisites in the hands of employee. This health insurance we can take from the section 80D, where we are going to learn about health insurance, medical insurance, and you are going to learn it in the deduction chapter. Okay, and this benefit alone, it is allowed for employee and family members as well. Okay, all the other insurance benefit is only for the employee. Next, if employer takes a personal accident policy for the employee, then that is also exempt in the hands of employee. Next, if the employer does a staff group insurance scheme, okay, staff group insurance, then that is also exempt in the hands of employee as perquisites. Now, some special points. Life insurance is taxable. If life insurance is paid by the employer, it is fully taxable. Okay. Next, family means who? Spouse, children, parents, brothers, sisters if they are dependent. Okay, similar to leave travel concession. However, here the children limit is not there. Next, hospital includes any dispensary or nursing home as well. Fine. Now let us come to education. Okay, if employer is bearing the cost of education of the employee, it is fully exempt in the hands of employee. Okay, no tax. However, if employer is bearing the cost of education of the employee's children, then if two conditions are satisfied, then the cost of education will be exempt perquisite. Okay, what are the two conditions? Number 1, the institution should be the employer institution or a tie-up institution. Okay, employer institution or a tie-up institution. Sir, what is tie-up institution? I gave you an example. If Tata company has tied up with Delhi Public School, then if Tata employees are studying in Delhi Public School, then it is a tie-up institution. Okay, and the value of education should be only up to 1000 rupees per month per child. 1000 rupees per month per child in that institution. So the fees of Delhi Public School should only be up to 1000 rupees per month per child. Okay. For the employees of Tata, it will be free. However, for the other students also, it should be 1000 per month per child. Sir, what will happen if it is more than 1000 per month per child? The full amount will be taxable. Full amount will be taxable. Okay, so if both the conditions are satisfied, full amount exempt. If both conditions, even if one of the condition is not satisfied, the entire amount is going to be taxable as perquisites in the hands of the employee. Okay, and now for other people, if education facility is given for any other family member like spouse, okay, parents, brother, sister, friends, anyone, then it is fully taxable in the hands of employee. Okay, are you able to understand? Now next, free tickets or passes to transport employees. So if free tickets or passes are given to transport employees, then it is exempt in the hands of the employees of airlines and railway. Airlines and railway. However, if it is given for any other employee in any organization, the ticket amount is fully taxable. Okay. Next, food expense. If alcoholic beverage is given to the employee by the employer, fully taxable. However, for any other food or any non-alcoholic beverages, okay, you should see whether the area is a remote area. If the area is a remote area, then the entire amount of food given by the employer to the employee will be exempt in the hands of employee. Okay. However, if it is not a remote area, then tea, coffee, snacks, refreshments, etc. Okay, given during office, it is fully exempt. However, if a full meal is given, that is lunch, dinner, etc., then in such case, exemption is given up to rupees 50 per meal if it is given directly by the employer or if the employer gives some vouchers. If employer gives some vouchers, okay, wow, that too up to rupees 50. Sir, what if it is more than rupees 50? The additional amount is going to be taxable. Up to rupees 50 it is going to be exempt. Okay, so be careful. Next, club recreation, etc. So if club recreation, etc., if it is extended to all the employees of the organization and if it is for health or sports, okay, if it is for health or sports, then it is fully exempt in the hands of employees. However, if it is not extended to all the employees or if it is not health or sports, then you should see whether it is a corporate membership or not corporate membership. If it is a corporate membership, it means what? For example, an employer is giving a bulk amount, a lump sum amount to a club. For example, Gymkhana Club. If employer is giving a lump sum amount to Gymkhana Club for the club membership for all the members of employees combined, then it is called corporate membership. In such case, you cannot find out how much amount is spent for which employee. Okay. Hence, this initial membership cost, that is initial expenses, will not be considered as perquisites, but the balance amount that is paid by employer will be considered as perquisite and it is fully taxable. Okay. And for the other types of membership, the amount borne by the employer is taxable as perquisites. Okay. Now, you should see whether a club or recreation facility is for official purposes. If it is for official purposes, it is fully exempt. No need to add it in the perquisite value. However, if it is for official purposes, you should satisfy certain condition. What are the condition? That the club facility or recreation facility should be fully for official purpose. Number 2, complete details of the expenses should be maintained by the employer. Okay, and number 3, employer should give a certificate to the employee that this expense was only used for official purposes. Okay, these three conditions you are going to see in credit card expenses as well and motor car facility as well. Okay, so remember these points. This will come in three places, in credit card and in also motor car. Fine. Now let us see the other perquisites. Firstly, rent free accommodation. Very easy, at the same time very important as well. So if rent free accommodation is given by the employer to a government employee, then how to calculate the perquisite value? Perquisite value will be the license fee prescribed by the government. License fee prescribed by government, and you should reduce the rent borne by the employee. This I already told you. If employee is giving back any amount to the employer, you should reduce it from the perquisite value. Okay. Now, if there is any other employee, okay, other than government employee, and it also includes the government employees in non-government organization, government employees deputed in non-government organization. Sir, why, sir, government employees in non-government organization are coming here? It is because When government employees are in non-government organization, they are not staying in government facility. In such case, license fee will not be available. Hence, you should see these limits. Okay, wow. So for government employee, we saw other limit. Now for other employees, we are going to see the limit. Okay. So if it is other than government employee, you should see whether the house in which the employee is staying, it is the employer's property or not employer's property. If it is the employer's property, you should take 7.5%, 10% or 15% of the salary as the case may be. 7.5% should be taken if the population of the city is up to 10 lakh people. Okay, 10% of the salary if the population is more than 10 lakh but up to 25 lakhs, and 15% of the salary if the population is greater than 25 lakhs. Okay, you get my point? Okay, now what is the salary? This salary definition you have to remember by heart thoroughly. I gave you a mnemonic, that is ABBCDM minus AAPP. So what and all you should include in salary? Number 1, taxable allowances. Number 2, basic salary. Number 3, bonus. Number 4, commission, can be any commission. Number 5, dearness allowance forming part of terms of employment, or dearness allowance for retirement benefit. Okay, so dearness allowance in terms only you have to add, not in terms you should not include. Okay, then next one is any other monetary payment given by the employer to the employee. So all these amounts should be added. However, we should not include certain amounts in the salary. What are those? Number 1, advance salary. Number 2, arrears of salary. Number 3, retirement benefits like provident fund, gratuity, etc. And number 4, perquisites. So 4 should not be included in salary. The remaining should be included in salary. So what is the salary definition? One more time. Okay, very very important. Number 1, taxable allowance, then basic salary, then bonus, commission, dearness allowance in terms, and then monetary payment. However, we should not include advance salary, arrears of salary, retirement benefits like provident fund, etc., and then perquisites. Fine. So this is the definition of salary. So if it is the employer's property, you should take 7.5% or 10% or 15% of the salary as the case may be, and reduce the rent if any recovered from the employee. If it is other than the employer's property, then you should take 15% of the salary or rent paid by the employer, whichever is lower. 15% of the salary or rent paid by employer, whichever is lower, it will be the perquisite value, and if any rent is recovered from the employee, it should be reduced. Okay.
Now let us discuss the update from May 2024 examination onwards. For the previous year 23-24, now the rules or the rates of rent-free accommodations have changed. Okay, so for previous year 23-24, but now listen very carefully, because in the amendment lecture I have taught you to see only the new provisions, but since this new provision is coming into effect from 1/9/2023 onwards, hence till 31st of August 2023 the old provisions are also applicable. Hence you have to study both old provisions and new provisions. Listen to me very very carefully if you are writing your examination in May 2024 or later on, and if previous year 23-24 is applicable for your examination, then you have to study both old provision as well as new provision. The old provision I had discussed just now before this. Now I am going to discuss the new provision, and I will also tell you an example by which you can clearly understand how to calculate using both the provisions. So from 1/9/2023, that is from the 1st of September onwards, the new rates have come for rent-free accommodation perquisite calculation. What are those new rates? Let us see. If the property is other than employer's property, then instead of 15%, now the rate is 10%. And in case of employer's property, then now we should not see the population up to 10 lakhs, up to 25 lakhs, and up more than 25 lakhs. Instead of that, we have to see the population up to 15 lakhs, more than 15 lakhs, up to 40 lakhs, and then greater than 40 lakhs. And for that also the rate have changed. What is the updated rate, sir? The updated rate is
if the population is up to 15 lakhs, then you have to take 5% of salary. If the population is more than 15 lakhs up to 40 lakhs, then you have to take 7.5% of salary. And if the population is more than 40 lakhs, then you have to take 10% of the salary. Hence, sir, should I remember both the rates? Answer is yes. You have to remember both the rates because you are caught in between the transition provision. So up to 31st of August 2023 there are different rates, and from 1st of September 2023 onwards there are different rates. Now sir, if I get a question in the examination, how will I solve the question? Let us see an example. So for example, the employer has given a rent-free accommodation to a employee in Chennai. Now what is the population of Chennai? Is it more than 25 lakhs? Answer is yes. Also, is it more than 40 lakhs? Then also answer is yes. So more than 40 lakhs is the population. And let us assume no rent is recovered from the employee. And the salary of the employee is 50,000 rupees per month. Now in such case, how to calculate the perquisite of rent-free accommodation? Now for the first 5 months, that is April, May, June, July and August, for the first 5 months the old rates were applicable. So now for the population of Chennai, what is the percentage of salary that we have to take as perquisite? Answer is 15%. Till 31st of October we have to take how much? 15%. Now, so we will take 15% for 5 months. Similarly, in the new provision, that is from 1st of September 2023 onwards, how much percentage is it? Answer is 10% for the population of more than 40 lakhs. So we will take 10%. So 50,000 multiplied by 10% into 7 months comes to 35,000, and the total is how much? 72,500. So like this you have to do a calculation of perquisite if the employee is staying in employer's property throughout the year. Sometimes the question might ease your calculation and tell that the employer property is only occupied from 1st of September 2023 onwards. In such case, you should apply only the new provisions. Sometimes the question also might tell you that the employee was staying in the employer's property only till 31st of August 2023. In such case, you have to apply the old rates and old provision. And if in both the periods the employee is staying, then you have to do the calculation like this. I hope you are clear with the rent-free accommodation here itself. So instead of striking down the old provision, I want you to have the old provision. So learn that also and learn the new provision also. If you want, you can pause this video and then note down the new provisions then and there in the same page itself, so you can compare both of them and study. Fine. Then if furniture is also provided along with accommodation, then you should add the furniture as perquisite also. If it is the employer's furniture, you should take 10% of the cost of furniture. 10% of the cost of furniture, not WDV. Okay. Then if it is any other person's furniture, take the higher charges paid by the employer, and that will be the taxable perks. Okay. Now some special points. Sir, there is a transfer of the employee, okay, and because of the transfer, one house is given by the employer in the old place as well and in the new place as well. So if there are two accommodations given by the employer, then in such case, for the first 90 days, okay, consider only the lower amount as taxable perks and the higher value will be exempt. Okay, wow. If two houses are given by employer to the employee, then the value of the lower house, okay, that the lower value should be considered as perquisite, higher value should be ignored. And after 90 days, what will happen? Both the accommodation should be considered as perquisites. Okay, so that is up to 90 days one house exemption is allowed. After 90 days both houses should be considered in taxable perquisites. Next, very important, salary should be taken only for the time during which the employee is occupying the accommodation. So the period during which the employee is staying in the house, only that period you should consider. Okay. Next, salary is this rent free accommodation, it is fully exempt for high court and supreme court judge, member of parliament, union minister and leader of opposition. So it is fully exempt for these special people. Next, very small special point, not very important, that if the employee is in mining, oil exploration, power generation, offshore or onshore site, then in such case, if three conditions are satisfied, that is, the accommodation should be up to 800 feet, the accommodation should be at least 8 kilometers away from the municipality, and it should be at least 40 kilometers away from a town where the population is more than 20,000. So if all the conditions are satisfied, then such rent-free accommodation is also fully exempt. Okay, wow. However, this is not a very important point. You just go through it once so that if in case it comes in exam, you are able to answer. Okay, next, hotel benefit. Taxable perquisite will be 24 percentage of the salary. Okay, what are we seeing? Hotel benefit, that is hotel given by employer to employee, hotel rooms I mean. Okay, so 24 percentage of the salary or rent paid by the employer, whichever is lower, will be the taxable perquisites, and if any amount is recovered from the employee, you should reduce it. However, if there is a transfer of employee from one place to another place, then this hotel benefit is exempt up to 15 days. Up to 15 days fully exempt, more than 15 days fully taxable. More than 15 days fully taxable. Now let us see motor car. Motor car. Motor car, we should see whether it is used for official purpose or personal purpose or partly official, partly personal purposes. Firstly, let us see official purpose. So, if employer gives a motor car to the employee and if it is used for official purpose, the amount is fully exempt. There is no need to tax any perquisite. Okay. However, for official purposes, you remember the three conditions that we studied in club recreation, that should be applied here also. Only if the conditions are satisfied, the official purpose car will be exempt from taxable perquisite. Okay. Now, personal purpose. If motor car is used for personal purpose by the employee, then you should see whether the car is the employer's car or hired car. If the car is employer's car, then 10% of the cost of the car will be taxable perquisite. Okay, if it is a hired car, then the hire charges paid by the employer will be taxable perquisite. Okay. However, you should also add the driver salary if any paid by the employer and running and maintenance expense if any paid by the employer. Okay, would I use for personal purpose. Now let us see the tricky part, that is partly official, partly personal purposes. First let us see for the employer car, employer's car. Okay, so if the running and firstly the employer is giving the car, employee is using the car. Okay, so if running and maintenance expenses is paid by the employer, okay, then what will be the value of perquisite? The value of perquisite will be 1800 per month if the car is up to 1600 cc, or 2400 per month if the car is more than 1600 cc. Okay, if the car is the employer's car and running and maintenance expense is paid by the employee, then 600 per month will be the value of perks if the car is up to 1100 cc, and 900 per month will be the value of perks is the if the car is more than 1600 cc. Okay, now let us see what will happen if the car is the employee's car. If the car is the employee's car and running and maintenance expense is also paid by the employee, you no need to tax any perquisite because the entire amount is borne by the employee. Employer is not giving anything, so no need to add perks. However, if the car is employee's car and running maintenance expense is paid by the employer, okay, then what you should do? First, you should take charges paid by employer. Okay, charges paid by employer, and then you should reduce 1800 per month or 2400 per month as the case may be for a small car or big car. You will find the answer. That answer will be perquisites. However, sometimes the employee will say that this 1800 per month or 2400 per month is a very small amount. I want to subtract a bigger amount. In such case, there is a clause that if the conditions for official purpose are satisfied, that is, the employee is able to tell that I am using this much amount for official purposes, then such amount can be subtracted here instead of this 1800 or 2400 per month. Okay, so I'll tell again so that you don't get confused. Firstly, there is an employee's car and running and maintenance expense is paid by the employer. In such case, what we should do? Take the charges paid by employer. Okay, from that you reduce 1800 per month or 2400 per month. Then the amount which you get as the answer will be the taxable perquisite. However, sometimes the employee wants to reduce a bigger amount. Okay, in such case, the Income Tax Act is telling if you are able to satisfy the conditions, that is, the car should be used for official purpose, employer should maintain the details of all the official purposes, okay, and third, employer should give a certificate that it is used for official purpose. In such case, that official purpose amount can be reduced here and the final amount will be called taxable perquisites. Okay, next, above all this, if driver salary is paid by employer, okay, add 900 per month to the value of perquisites. Okay, then one more special point, sir, if there is more than one car which is used for partly official, partly personal purpose, then what to do? Then only one car can be treated as partly official, partly personal purpose. Remaining all the cars should be treated as fully personal cars. Okay. Now, let us see loan. If loan is given by the employer to the employee at a nil rate of interest or at a concessional rate of interest, okay, then you should find the perquisite. What is the perquisite, sir? It is the loan value into multiplied by SBI interest rate on the first day of the previous year minus actual interest rate. SBI interest rate minus actual interest rate into the loan value will give you the taxable perquisite. Okay, and if the loan value is reduced each and every month, okay, or in between the year if it is reduced, then this calculation that I have told you, this you have to do every month end and then find the total answer. You will get the taxable perquisites. However, this perks will not be taxable if the value of the loan, interest value of the loan is up to rupees 20,000 or the loan is given for a specified disease like cancer, tuberculosis, etc. Okay. And one more point, you should link this loan at concessional rate with advance against salary. Okay, I already told you the difference between advance salary and advance against salary. Advance salary should be added to the salary. Advance against salary should be treated as loan amount. Okay, so if against salary is there, you link it with this particular perquisite and find the value of the perquisite. Okay, next, gift, voucher, token, etc. So if any gift, voucher or token is given from the employer to the employee, then you should see whether the gift is in cash or in kind. If it is in cash, it is fully taxable. If it is in kind, if the value is below 5,000, if the value is below 5,000, it is fully exempt. If the value is 5,000 or more, it is fully taxable. Okay, not that up to 5,000 taxable, more than 5,000 exempt, not like, nothing like that. If it is either fully exempt or fully taxable. Okay, and here be very careful, even if it is exact 5,000 rupees, it is going to be fully taxable. And this you are going to link with income from other sources when we are going to learn section 56 to 10. Okay, wow. In 56 to 10, okay, if there is employer employee relationship, you should see taxable perquisite. If there is no employer employee relationship, you should see 56 to 10. Fine. Now, travel, tour, accommodation, etc. If travel, tour, accommodation facility is given as leave travel concession, then refer the leave travel concession. If it is other than leave travel concession, you should see whether the tour is given for official purpose and or not for official purposes. If it is given for official purpose, the amount spent for the employee is fully exempt. The amount spent for the family members is fully taxable. It is fully taxable as perquisites. Okay. Now, if amount is not spent for official purposes, then if the tour is offered to all the employees, then the amount incurred by the employer is perquisite. Okay, very simple. However, if the tour is offered only to some particular employees, then perquisite value will be the value offered by other agencies to the public. Fine. Now, One more special point, if an official tour is extended as a vacation, then the amount spent for the vacation period will be taxable as perquisites. Okay. Now let us come to specified security, that is sweat equity, like for example ESOP, etc. Okay. ESOP means what? Employee stock option plan. So sir, what are these specified securities? These are nothing but shares offered at a concessional price. Okay. In such case, the taxable perquisite will be fair market value on the date of exercise minus the issue price. Okay. This fair market value we should take on the date of exercise. Sir, how to find the fair market value? Very simple. Firstly, you should see whether the shares are recognized in stock exchange or not recognized in stock exchange. If it is recognized in stock exchange, you should take the average of the opening balance and closing balance in the date of exercise in the highest volume stock exchange. Okay. So if there is Bombay Stock Exchange or National Stock Exchange, you should see where the volume was highest, and on that day, okay, that is the exercise date, you should see the opening balance and closing balance. You should find the average. This average will be the fair market value. However, if on the date of exercise no trading took place in the stock exchange, then what should we do? Then the fair market will be the closing price, not average price, closing price on the date on which the trading took place previously. So you should find the previous date in which trading took place. On that day, in the highest volume stock exchange, take the closing price. Okay. Now, if in question you are getting both buying price as well as selling price, then consider the selling price. Fine. Now, sir, what to do if it is not recognized in stock exchange? If it is not recognized in stock exchange, you should find out the value determined by merchant bankers, and that will be the fair market value. This value can be on the exercise date, and if on the exercise date it is not available, the value determined within 180 days previously. Within previous 180 days should be taken as the fair market value. Okay. Now, tax. Now there is an amendment. Okay, what is the amendment? The amendment is for the employees of eligible startup. Okay, so I'll go through it quickly. If there is a tax on perquisite of specified securities and sweat equity shares, okay, in the year of exercising option, okay, generally tax on perquisite is levied in the year in which the option is exercised. However, where the shares or on securities or shares are allotted by eligible startup, then perquisite will be taxable in a different year. What is that year? It is between three dates whichever is earlier. It is within 3 dates whichever is earlier. What are the 3 dates? Number one, after the expiry of 48 months from the end of relevant assessment year, or the year in which the sale of security or the share is made by the assessee, or number 3, the year in which the assessee ceases to be the employee of the employer. So generally what happens, the amount of sweat equity, okay, is taxable as perquisite in the year in which the employee exercises the option. However, if the employee is the employee of an eligible startup, okay, then in such case the taxability will come in the year which is earlier of the three periods. What are the three periods? Number one, the expiry of 48 months from the end of relevant assessment year. Number two, the year in which the sale of shares or security is made by the assessee. And number three, the year in which the assessee ceases to be the employee. Okay, whichever is earlier. In such year, the amount is going to be taxable. Okay, a theory question may come about this clause in your examination, so be thorough with it. In the class I have also given you an example, so I hope you are clear. Okay, now let us see use of movable assets. Okay, so if movable assets are given by the employer to the employee for the purpose of usage, then you should see whether it is computer or laptop. If it is computer or laptop, etc., then it is fully exempt. No need to have perquisite taxable. Okay, wow, because computer laptops are usually only given for official purposes. Now, if it is other than computer laptop, you should see whether the asset is owned by the employer or hired by the employer. If it is owned by the employer, the taxable perquisite will be 10% of the cost. However, if it is hired by the employer, then it will be the higher charges paid by the employer. Okay. Now, next perquisite, transfer of movable asset. So if there is any movable asset which the employer has permanently given to the employee, okay. For example, the employer has a laptop. The employee has given the laptop to the employer has given the laptop to the employee permanently. Okay. In such case, the taxable perquisite will be the WDV of that particular asset minus any consideration if received from the employee. Okay. How to calculate the depreciation to find out the WDV? Firstly, in case of laptops or computers, you should do 50% WDV method depreciation. Okay. Then in case of car, you should do 20% WDV method depreciation, and in case of any other asset, 10% straight line method of depreciation. 10% straight line method of depreciation. And remember, depreciation should be done only for the completed years. Okay, wow. So if an asset was used for 5 years and 10 months, find the depreciation only for 5 years. Okay, ignore the 10 months. Next, other taxable perquisites. So whatever we have discussed now, we have discussed how to value the perquisite. For any other amount which is coming as perquisite, you should see what is the amount incurred by the employer, or the fair market value of such perquisite, as the case may be, will be the value of the perquisite, and that will be taxable in the hands of employee. Okay. For example, gas, electricity, water supply. So if any gas, electricity or water supply is given by the employer to the employee, then you should see what is the value of such gas, electricity, water supply. That will be the taxable perquisites. Then free domestic help. If any free domestic help or personal attendant is given by employer to employee, then you should see what is the salary paid to that domestic help. It will be the taxable perks. Next, credit card expenses. If any credit card expense is paid by employer, okay, then in such case the entire amount paid by the employer will be taxable perquisites. However, if it is used for official purposes, then you should see whether the conditions are satisfied. What are the conditions, sir? Number 1, that it should be used for official purpose. Number 2, employer should maintain a record of all the amounts spent for official purpose. Number 3, employer should give a certificate to the employee that it was used for official purpose. If all the three are satisfied, then such credit card expense need not be taxable as perquisite. Next, payment of any obligation by the employer. Very important. Okay, wow. Payment of any obligation by the employer. Okay, if any obligation is met by the employer, okay, for example, employee needs has any obligation, for example, paying the internet bill, giving salary to the domestic help, okay, etc. If any obligation is met by the employer, then in such case the entire amount is fully taxable. What is the entire amount? The amount paid by employer, it is fully taxable as perquisites, and it is taxable for every employee. Okay, and then any other perquisites. Sir, now let us learn about specified and non-specified employees. Specified and non-specified employees. Sir, who are specified employees? Specified employees are the big employees. Sir, what is the definition? Number 1, directors are specified employees. Number 2, any employee having 20% or more voting power in the organization. Employer's organization is a specified employee. And number 3, any employee getting a salary of more than 50,000 rupees per year. 50,000 rupees per year. Okay, and this salary should be the salary excluding the non-monetary perks, and you should reduce the deductions. So if the salary is less than 50,000, which is very rare, in such case that employee is considered a big employee. So for specified employees, some benefits are not given, okay, which we have already discussed. However, for non-specified employees, okay, that is small employees, certain facilities are fully exempt. Certain facilities are fully exempt. What are those facilities? Number 1, education facility, fully exempt. Number 2, transport facility, that is giving free tickets to the employees, fully exempt. Number 3, giving a free domestic help, that is a gardener, sweeper, watchman, or any personal attendant, that is also fully exempt. And then number 4, any gas, electricity, or water supply given by employer to employee, fully exempt. And number 5, motor car facility given by employer to employee is fully exempt. So we have already studied these facilities, correct? That we have seen whether it is taxable or exempt. So all of that we have studied before. It is only for specified employees, whereas in case of non-specified employees, the entire amount is going to be exempt from tax. Okay. However, be very careful. I already told you, only facility is exempt. The reimbursement given by employer to the employee, it is not exempt, because it is an obligation of the employee met by the employer. Okay. Only the facility is exempt. Reimbursement of the amount from the employer to employee, it is not exempt, because such reimbursement, it is the obligation of the employee met by the employer. Fine. Next, relief under section 89. Okay, it is the relief under section 89 is given for arrear salary or arrear pension. So what is arrear salary? Arrear salary means any disputed or retrospective salary of the past period that is received in the current period. Okay, for that a relief is given under section 89, and in class I also told you why such relief is given. So now we will just see the steps. Firstly, we have to calculate the tax for all the assessment years. Okay, that is the current assessment year and all the arrear assessment years, including arrear and excluding arrear. Okay, so find out all the taxes, then find the arrear tax. Sir, how to find the arrear tax? Arrear tax is equal to tax including arrear minus tax excluding arrears. Okay, later on find the relief. What is the relief? Relief is arrear tax in the current assessment year minus the aggregate of the arrear taxes in that assessment years. Okay, you will find the relief value. Such relief value should be reduced from the tax amount to find the final tax. Okay, in this relief under section 89, only if you do the question you will be able to be clear. I think the question is question number 24 in the study material. Illustration 24. Do solve that question to be clear with the concept. Now one more final concept of pay scale. Sir, when you see the question paper, you may find the wordings like this: 10,000, 1,000, 13,000, 1,500, 16,000, 2,000, 20,000, etc. like this. So what does this mean? This means it is called a pay scale. So it means that initially the salary is going to be 10,000, then it is going to increase by 1,000 every year till it reaches 13,000. After it reaches 13,000, it is going to increase by 1,500 every year till it reaches 16,000. You get my point? So this is called pay scale. So you should find the pay scale for every year, and then whichever year you are asked to find the salary, you can take the pay scale from that particular year and find the salary. For example, in the above pay scale, the salary for previous year 2021 is how much? 3 months into 14,500 and 9 months into 16,000. So total amount is 1,87,500. So this was the concept of pay scale. So keep learning, keep revising. See you in the next video. Till then, take care. Bye bye.